Hey guys, hope you are all having a great morning. Today we are going to talk about a recent Zillow study actually showed how Wall Street is causing homelessness while profiting from the harm it does to people. I want to credit Tom Hartman at the Milwaukee Independent for inspiring me to write up this morning's episode. We have talked in great deal about how Wall Street is aggressively expanding and taking away future home ownership from millions of Americans. Funny enough, Wall Street is investing big time on Zillow among other similar companies so that they can speed up and grow their business of buying up pretty much all the best middle-class housing so that people see themselves forced to rent. I have made an entire series on this topic, so if you are new, feel free to go to the playlist of this channel and you will see a series solely based on digging up how Wall Street is investing deeply to take full ownership of the housing in America, and the connections it has with meme stocks. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. According to research funded by real estate listing company Zillow, when neighborhoods reach a rent rate in excess of 32% of neighborhood income, homelessness starts dramatically increasing. This is something that we have actually just had the chance to see play out right in front of us across different cities all over the nation. Millions of people have been left homeless, and a small handful of billionaires are making a huge profit on it. As we have talked in great detail, housing prices have exploded in recent years. As Zillow's research noted, across the country, the rent burden has already exceeded the 32% of median income threshold in 100 to the 386 markets included in the analysis. A close analysis into the situation shows that American cities have seen the increase in housing costs since the 1950s in some part due to the growing wealth and population of the country. One of the key ways in which the problem is artificially kept worse is by restricting the amount of new housing being developed, particularly of low-income housing. However, the Zillow research showed that another factor that is driving housing prices through the roof can be attributed to rent affordability too. Homeless population climbs faster when rent affordability crosses certain thresholds. In many areas beyond these thresholds, even a modest rent increase can push huge numbers of Americans into homelessness. So how exactly did things get this bad, you might ask? Well, research suggests that foreign buyers over the last 30 years have also been buying tons of houses. Just last year, foreign investors picked up 154,000 homes. The dangers of foreign housing ownership cannot be overstated. As a MarketWatch article noted in 2015, unusual high appreciation of the aforementioned urban centers is due to the ever-growing influx of foreign buyers, mostly wealthy Chinese, who view American residential real estate as the safest investment commodity. According to a National Realtors Association survey, the Chinese spent $22 billion on U.S. housing in 12 months through March of year 2014. And other foreign buyers primarily include Canadians, British, Indians and Mexicans. However, a closer look into foreign investment for housing shows that it has actually been decreasing and down over the past couple of years. What has actually taken over and really driven prices today are a collection of small handful massive multi-billion-dollar funds that have infested all neighborhood and bought everything that has been put on the market. They have taken up and bidden against families and driven up housing prices. An article by the Wall Street Journal talked about how in one suburb in Nashville, Spring Hill to be exact, 4 firms own about 5% of all the houses in town. This number is growing and expected to hit double figures pretty soon too, and this isn't even the worst part in all of this. A similar phenomenon is currently taking place in Atlanta. Investors with pockets deeper than the Mariana Trench actually wrote cashier checks in various denominations so that they could take advantage over families in purchasing homes. That way they wouldn't have to interrupt their buying spree with trips to the banks. This tactic is running rampant across the biggest cities and suburbs all across America. We are also seeing investment giants use algorithms to calculate the likelihood of turning houses into rental properties, and then they quickly go out and make an unbeatable cash offer to the owner. In fact, they are so aggressive with their offers that oftentimes the cash bids are placed literally minutes after a house or property gets listed on the market. Once they strip all the best and good housing in neighborhoods, they quickly begin phase 2 of their master plan, which is to raise rents to levels almost unaffordable and completely unprecedented. The same Wall Street Journal article talked and quote people saying that a normal 3-bedroom and 2-bath house used to go for about $1,000 a month about 1 to 2 years ago. Right now, The same properties have a rent price of $1,773 per month, almost double. I think it's time to start calling out the real perpetrators that are causing this. Blackstone Group, which is now the world's largest real estate investor, is one of the biggest companies pushing thousands into homelessness every month. Not too long ago, they were noted as buying $150 million worth of American housing every single week. Guys, let me state that again, because this number is absolutely insane. Blackstone Group was recently spending $150 million buying up housing every single week, trying to park around $10 billion total. And if you think this is the biggest jaw-dropper of this video, buckle up. In 2018, corporations, mostly from Wall Street, bought 1 out of every 10 homes sold in the United States. Between 2006 and 2016, homeownership rates fell down to the lowest levels they have been in 50 years. The number of renters grew about a full quarter. Wall Street firms have not been quiet about their plans either, with Morgan Stanley having published a report back in 2011 where they argued that they had to snap up houses and rent them back to people who would have otherwise bought the houses. They actually deemed it the newest and hottest investment opportunity for Wall Street's billionaires and their funds. Warren Buffett, KKR and the Carlyle Group all took quick notice of the article and followed suit in investing into housing, followed by hundreds of other smaller investment groups. As housing and rent prices are both being driven through the roof, the result for Americans has been crushing and devastating. A study by Harvard and the Robert Wood Johnson Foundations found the following. 38% of all households across the nation reported facing serious financial problems in the last couple of months. The sharp income divide is a serious financial problem, as 59% of people earning less than $50,000 per year faced serious financial problems in the past few months. Another significant problem is that many households lost their savings during the pandemic and have nothing left to fall back on. As eviction bans expired, 27% of renters reported serious problems paying their rent. When combined with the issues that were found by the Zillow study, the results get even darker. Communities where people spend more than 32% of their income on rent can expect a rapid increase in homelessness. Income growth has not kept up with rent, leading to an affordability crunch with cascading effects that for people at the bottom economic rung, increases the risk of homelessness. Areas that are most vulnerable to rising rents, unaffordability and poverty hold 15% of the American population, and 47% of people experiencing homelessness. I know this will sound incredibly controversial for those at the top, but housing is essential for life. Nobody as America should not be barred from having homes because Wall Street needs to park their money on real estate. This is a huge unsung crisis that the media fails to report on, and one that keeps on growing and affecting millions of people. Criminal activity will rise, generational wealth will end, birth rates will continue to decrease, newer generations will have to live at home or be forced to rent with their friends pretty much for about 1 to 2 decades after they turn 18. Nothing about these results was even remotely positive. Under all circumstances, we are being crushed by the psychopaths running Wall Street, and I think it's about time we started talking about it. Thank you all so much for watching it to the end. Let me know if you enjoyed the video. You guys are all amazing and I thank you so much for being here with me. If you want to support the channel, I have left links in the description for my Patreon if you would like to pledge a monthly support of any amount you want. I also left a PayPal and Cash App link if you want to make a one-time donation. Have a great day, hope to see you later and to the moon.